today's webinar, we are going to explore an exciting business opportunity with a jewelry brand called Kohira. Kohira is a premium diamond jewelry brand backed by 33 plus years of jewelry manufacturing expertise. The brand specializes in IGI certified lab grown diamond jewelry, offering a perfect blend of luxury, sustainability, and affordability. With a strong focus on craftsmanship, bespoke design, and transparent pricing, Kohira is redefining the modern jewelry buying experience. The brand offers a wide range of rings, earrings, pendants, bracelets, necklace, catering to customers seeking a premium yet value-driven luxury. With 11 plus exclusive stores and 30 plus shop-in-shop locations across India, Kohira is rapidly expanding its footprint through FOFO and FOCO model, franchise model. And by combining in-house manufacturing capabilities, lifetime exchange and buyback benefits, and the growing acceptance of lab-grown diamonds, the Kohira is well positioned to become India's leading new age luxury jewelry brands. To talk more about this, I'm joined with the national franchise head of Kohira Jewelers, Pankaj. Along with my colleague, we have Krishna sir, who is a financial consultant, who's going to help us understand the financials of this brand. And we also have Shashank, who's the business manager from Franchise India. So before I invite Pankaj to talk more about the brand and the business, I would like to inform all our viewers that in case if you would like to ask any question related to the brand or the business, my request is to please keep it posting into the Q&A box, and we will take them up once the presentation is over. So, yep, now all set. Now would like to welcome Pankaj to this webinar, and I would now request him to please take the lead. Let's get started a little bit of your introduction, and then we will move on to the presentation part. Over to you.
Thank you, Bharatji, and thank you, franchise team, for a humble introduction. Thank you very much, and thank you for the platform Franchise India is providing for me and for the other brands also. They are doing a great job providing that bridge between the investors and the brands. Thank you very much for that. So, as rightly said by Bharatjan, we are a 33-year-old brand, and we are into jewelry from a long time. So let's start with the presentation. I will share.
Yeah, visible.
Okay. So Kohira was built with a main vision to bring a national scale lab grown diamond jewelry to modern and mindful luxury luxury peoples who wanted very transparent, ethical, and quality driven mindset for any lab grown diamond jewelry. In Kohira, we provide only type 2A diamonds, which are the purest and the most physically, automatically, chemically, optical property wise, same diamond structure which are in earth grown diamonds. Basically, the lab grown diamond market structure is growing gradually. The major share is from America. From US, it is been driven for a long time. It is the major shareholders. They are growing at an average of 13% annually. And by 2033, it would be getting to around 19.3 billion. India is also now growing rapidly. We are growing at a very steady pace of 14.8%. It is going to get high day and day, and by 2036, we would be going at a rate of around 1.8 billion. So definitely the market share is high. People are gradually moving towards lab grown diamonds due to the cons of earth grown diamonds. There are plenty of it, so it would grow naturally. Metros have already given their fair shares, and tier 2 and tier 3 are gradually rising to lab grown diamond segments. So coming to the legacy, what we have right now. Kohira is a child of VK Jewels. VK Jewels was formed in 1993 with a silver jewelry manufacturing unit. And from there, the journey has been very great for us. We have evolved day in, day out with a very precise vision to grow and become the major B2B vendor in Pan India. We were the first company to introduce paper casting, lightweight casting, which is renowned in whole India. The intricate design with a lesser volume of gold, we were the first to introduce that. We have already gone into exports. By 2028, we had a capacity of 50,000 plus pieces a month. And gradually we shifted to gold. From that to 2023, we added the crown jewel Kohira to our brand. And Kohira started in 2023. In 2024, we launched our first showroom in Bandra, our first company-owned outlets. And from there, the journey has been exceptional. We are right now having 11 plus stores. We have a vision of growing 50 odd showrooms in this years. And by 2030, we would be crossing more than 100 plus showrooms in India. So what and how Kohira is positioned? So Kohira, as Bharatji has already confirmed, that we have a very good manufacturing excellence in-house. So that gives us flexibility that we can design different designs, we can design different jewelry in-house, and we can have that sort of superior quality control also, since everything is controlled over here only. So that gives us a very good customization and production capabilities also. We have a very good sample line strategy also. So we give a very good sample line products to all our showrooms, which allows them to not have their inventory blocked up with real gold and diamond. This sample line are best for bridal and bespoke jewelry because this will not block the investment, and plus this are entirely same as per real diamond and gold jewelry. So that also gives them very good flexibility to have the inventory in line with their returns. As we have already mentioned, we have manufacturing innovation. We have gone to patented special cut diamonds, in which we will have different faceted diamonds, which are not available right now. They are into productions, and definitely we will introduce them shortly in our all of our showrooms right now. And so further, we have all the bridal range for lab-grown diamonds, which have our very good statement sets, very high value heirloom styles, specifically for different regions of India. We have different categories for North India. We have different categories for South India. We have different categories for West and East. So every jewelry from our side has a story behind it, has a very good connection with the clientele. We have our own bespoke jewelry line also, which are tailored made for every person and their own personality. So, as already so told, we have a pan-Indian structured expansion model. We have SIS model also, in which we have different SIS in Kanpur, Lucknow, Hyderabad, Pune, Varanasi, and we are expanding right now to different locations. The main differentiation what we have from our other peers is that we only deal in type 2A diamonds. Now type 2A diamonds are the top 2% of diamonds which has the highest purity right now in market. So we don't do any other diamonds. We have no other diamonds other than type 2A diamonds. This sets us apart quality wise with our own peers. So that is where we have set ourselves very well in positioning with the market, that we will deal only in type 2. We have a very set design first approach. We want to have a very good design first approach, in which we want to go in line with the customer's requirement. We are continuously evolving ourselves. We are doing our own research. Our R&D team, our design team, our merchandising are very well placed in such a way that every new design is kept in each and every segment of India, whether it is north, south, west, or east. Plus, we continuously evolve ourselves with the market trends and the requirements. We have our own storytelling brands also, in which we have our own sort of jewelry designs which have their own story behind it. There are plenty of it, and gradually, if you go to our showroom, you will find it over there. So, what sort of operational or system support we have right now with us? So, looking at the inventory planning, we have certain smart inventory planning in which data are sorted strategy wise for each and every city. We have the right product mix also, the right quantity also at right time. What is going right now in different cities, what is required, and what people are asking. We have kept all the jewelry line in that only. As already mentioned, we have our own in-house management for all the manufacturing, for all the logistical support and everything. We have centralized everything from POS to logistics to everything. We have kept it in-house. We have full CRM support. We have real-time tracking and real-time billing tracking also. So that gives us the edge of centralized command from everything. You can always track it from here. The investor can track it from their own mobile also. We have a very set showroom strategy launch also. There are different launch strategies for different segments. If it is called for south, we have different sort of launching strategy. For north, we have different. The same way we have set our marketing also in line, that different brand campaigns are there for each and every city, for each and every showrooms. Different offline and online promotions are continuously been aired everywhere for each and every showrooms. We have a very good location intelligence also. We have our own set of leasings and scouting agents also. We have our own in-house team for scouting proper locations for each and every city. So we continuously try to find different locations in which proper business would be done, and the ideal location would be given to each and every investors. For that, we keep our inventory also for every real estate pool. We have different showroom locations for each and every city prior to any investor having engagement with us. So that gives us a very good edge over the others. So we don't have to find locations afterwards. We try to get it beforehand only, and we have already settled. We want this location to be there, and this city would have this much of showrooms in line. As I've already mentioned, we have our own logistics and inventory support. We have centralized supply chain, we have fast inventory movement, we have smart stock allocations, and on-demand manufacturing. We have our own make-to-order logistical support, in which people can come over there, they can show their designs. We want this set of design to be made for specific requirements. We have that thing. We have and plenty of stock allocations for each and every showroom. If there are certain shelf items which are there, we try to off shelf it as much as possible and bring newer design to them. We have our own product categories in which we can find rings, earrings, pendants, necklaces, bangles, bracelets, whatever you can have right now. We have in line. Everything is there in very proper proportions. We keep gold component in a way that it does have an heritage value also, and gold component in that way that both heritage and that sparkle is there. Right now, we have kept a mix of 40 to 60%, and we are trying to keep it to 50 to 50%. So everything is there for customers as well for investors. These are some examples of our craftsmanship. So coming to the models, we have two models as in right now, FOFO and FOCO. Let's start with FOCO. So investment module in FOCO, which is franchisee owned, franchisee operated. You will own the operational skills, and you will own the showroom also. In that, we have investment module of around 2 to 3.5 CR, in which 500 to 1500 square feet of preferred location would be there. Property identification would be provided by Kohira only. We would be there with you at every stage, right from the starting of finalization of property, then furniture and fit out until the opening of the model. We are there with you at every time. We are giving a structured margins for FOFO, in which we would enjoy a margin of 50% on diamond value, plus you would be enjoying 45% margins on making charges of gold. What sets FOFO apart from FOCO? So FOFO, in FOCO you have the potential of earning higher margins. You have every control over the operations. You can manage everything. You can set apart your own branding and the marketing support also. In line with there, we are with you for every set of operations after opening of showroom also. So this is what it is when it is a asset-backed investment. We have strong exit and buyback clarity also. You have a higher margin as and a passive income opportunity also. So this is the crux of the model, in which I have already shown what you required. 2.5 CR would be the inventory investment. 30 to 50 lakhs would go for furniture and fit out. The showroom size would be for 500 to 1500 square feet, depending upon the location and the city, what is required. If certain cities required a smaller amount of showroom size, we are ready for that also. The margin structure is like that. It would involve 50% of diamond value and 45% of making charges. A total of blended margin of 30.50% would be given to the franchisee. Payback period is coming to around 43%. And now in this inventory investment of 2.5 CR, we would be giving 3.5 CR worth of retail inventory. So that is where we have set us our own branding support also, that you enjoy the major share of retail valuation. Coming to FOCO is franchisee-owned, company-operated module in which you do the investment. The company does all the operations, everything from daily operations to day in, day out, to everything would be done by us. The investment module is same. It would range from 2 to 3.5 CR, depending upon the location and the city in which you want to open it. Showroom interiors would definitely come to 30 to 50 lakhs. Both the furniture and fit out and investment criteria are same in FOCO and FOFO. Here you enjoy good margin on sale of 8% on net reliable sale values. Plus, we are giving you a minimum guarantee of 13% on your investment structure. Plus, the same FOFO advantage is given over here. You will get an inventory for 3.5 CR as an against of 2.5 CR worth of inventory investment. In FOCO, you don't have to do anything. We are there for every operational requirement. We would be there. We for sales, we would be there for marketing, and we would be there for everything. You can see and track every bit of investment, what you have done, what you are getting, what is the sales, and what other day-to-day activities from your CRM support also. So we are having a very transparent focus structure in which we will do everything. You can see and have every bit of information with you. So these are the two set of investment models we are having right now. These are the showroom which we would be having henceforth. We are right now going forward with Hyderabad. Coming next couple of months, we would be going for Delhi also. New showrooms are lined up. This are the footfall right now, which we are having. As I have told, we started with Bandra. We have right now a company-owned company outlet in Bandra. Day in, day out, we have developed to Jayanagar, Bangalore. Bangalore, we have three showrooms right now operation in Jayanagar, Marathali, and Malleshwaram. They are going quite good. Mumbai and same in Bandra, we are having a very good response from the customers. We have opened in Amritsar, Kolkata, Delhi, Rajkot, Guwahati, Noida, Lucknow, and Hyderabad. We are coming with 3 showrooms. And Delhi, we are coming with more 2 showrooms in Rajouri and Ghaziabad. In NCR, we are having our own set of 6 to 5 showrooms planned. So this is sort of business offering we are offering. I open the forum to any questions and sets. And over to you, Bharat.
Right. Thank you. Thanks so much, Pankaj, for the detailed presentation. We can also see if there is any franchise fee. I think my request is if you could, if Krishna sir also, talk about the overall investment, a little deep dive in, that would also help us. So, is there any franchise fee, by the way?
So basically, we have positioned us in such a way that we are not charging any franchise fees for that. So as I've told, we have kept what all we can give to the investor. The same
Mhm.
way, what we have structured our investment policy also, we are giving 3.5 CR worth of investment, retail investment against the investment of 2.5. So in that way, also we have ethically placed ourselves. We don't want any franchisee fees from any of the investors in which we take something out from them and we don't refund it or sort of thing. We don't want that. In fact, we are giving minimum margins on security deposits also, which are given to any showroom.
Mhm.
So that is where we are very different from our peers, and we want every bit of investment which is been put by the person or the investor. We give whatever maximum we can give to them.
Right.
Uh, so, Bharat, I have shared the screen and the financial model is on the screen. Can you see the screen?
Yeah, yeah.
Okay. So, I'll briefly talk about the financials. Uh, like Pankaj said, there are 2 models. One is FOFO and one is FOCO. So, let us go through the FOFO assumptions first. Uh, store size is 1000 square feet that we have taken as an average store size. The monthly rental cost has been taken as 350 rupees per square feet. So the monthly rental is 3,50,000 rupees. Then we have the store investment. So the store investment is around 2.9 crores, out of which store capex is 40 lakhs and store inventory is 2.5 crores. Then we have the revenue assumptions, and according to the revenue assumptions, the monthly sales for the first year, which have been calculated using turns, we have started with lower turns, less than 1 turns, and later on we have gone for higher turns. So according to that, in the first year, the monthly sale is around 27 lakhs, and the annual sale is around 3.2 crores. Now we come to the margins. What kind of gross margin the franchisee will be getting? So, like Pankaj said, that the target is to have 50% gold value in the diamond studded jewelry and 50% of diamond in the diamond studded jewelry. So we have taken that by value 50-50 of gold and diamond. And on the diamonds value, the franchisee will get 50% margin. On the gold component, the franchisee will get 45% of the making charges. So we have assumed the most common making charge of 19% average as the for the calculation purposes. So 45% of 19% is 11%. So 11% is the margin that he will be getting on the gold component. So the blended franchisee margin using this method is 30.5%. That is the gross margin that the franchisee will be enjoying. Then we have taken some costs for rental, employee, operating expenses, electricity, advertising, and other expenses. Finally, we see that with these assumptions, the payback period on total investment is 43 months. It is less than 4 years, and the IRR is 38%. The monthly EBITDA for the first year is 2 lakh 10,000, and the annual EBITDA is 25 lakh 24,000. So this is a quick snapshot of FOFO. Similarly, I can take you to FOCO, and I'll just zoom the screen a little bit. Uh, so the store size, rental cost, investments, everything stays the same. The revenue assumptions also stay the same. Only thing is that how is the franchisee going to get the payback? Because in FOCO, we know that the franchisee invests in the store capex and the inventory, and the store is run by the brand. So, what does the brand give to the franchisee for all the investment? So, the franchisee is going to give 13% minimum guarantee on total investment to the FOCO investor, and this 13% will be given on the initial inventory, which is of 2.5 cr, and it is given on the depreciated value of store capex, that as the store capex keeps on depreciating, the depreciated value will be used for calculating the minimum guarantee. And the revenue share on diamond jewelry sales will be 8%. So higher of the two will be given. Either the minimum guarantee will be given or the revenue share will be given, whichever is higher. Thus, the interests of the investor are protected, and the investor is uh, ensured of a threshold level of returns through the minimum guarantee. Now, using these assumptions, we look at the payback period. The payback period is 63 months. It is for FOCO. The payback period will be longer than FOFO, because in FOCO there is just investment and there is no sweat, returns. There is no sweat equity to say. So basically, the person is not getting anything for operating the store, only for investing, and so the payback period is 63 months, or which is slightly more than 5 years, and the IRR on the total investment is 22%. So these are the summary financials at a high level. We can deep dive if anyone has any questions on the financials. I would be happy to answer.
So, Bharat, in this, actually, we have done whatever we can for both the models. We have kept a very good margin structure for FOFO, in which you can enjoy a very good and lucrative margin structure since you are operating the model. So definitely you have to have certain leverage on margins. In FOCO also, we have tried to give a very structured positioning on guarantees, plus a very good margin for sales also. Also, we have kept a very good proportion of diamond to gold jewelry structure, in which we give 50 to 50% of diamond as to gold, so that a person enjoys the valuation for gold and diamond, plus they enjoy the aesthetic value also.
Absolutely agree, Pankaji. Um, right. So, I mean, this is it about the investment. I think
Yeah,
the brand is offering both the models, FOCO and FOFO. In case if you would like to take care of the entire investment and the operational part, you can choose the FOFO model, franchise owned, franchise operated. However, in case if you would just be like to invest the money but not to participate in the operational activities, then I think you can go for co-model, franchise owned and the company operated, where the company will take care of the entire operations, including everything to operate that business. Right. So that is these are the two flexible model you have. Pankaj, you also said that there is no franchise fee. I mean,
correct.
the company's primarily focuses to give you better the benefits, you all the benefits, so that at least we can start with a good score and can expand thoroughly, right? So that is what
Yes.
our focus is.
So basically,
uh,
the
mhm.
focus is been right now not only to FOCO. So we up till now we have 11 showrooms, and there are mix and match of every module. We have a good amount of FOCO stores also. We have good amount of FOFO stores also. So we want that flexibility. If certain person want to enjoy their own business, they want to run their own showrooms, definitely we can do that.
In case if you would like to ask any question, you please keep it posting it into the Q&A. However, in case if you look into this overall, I think India has always been been the world's largest jewelry market. But today the major shift is happening, especially among the millennials and the Gen Z consumers.
Hmm.
Buyers are becoming more conscious about sustainability, value for money, and modern luxury. And this is exactly where Kohira has a huge opportunity. The lab-grown diamond industry in India is growing at a double-digit rate, and consumers are increasingly accepting the lab-grown diamond because they offer the same brilliance, the beauty as mined diamond at a significantly the lower price point. In fact, many young buyers today prefer bigger certified diamonds that are sustainable and affordable. Kohira is well positioned to capitalize this particular trend because it combines of 33 years of jewelry manufacturing expertise with a modern luxury retail approach. The brand offers IGI certified diamonds, bespoke jewelry, lifetime exchange, and buyback benefits. And they, of course, have the in-house manufacturing capabilities. So they have everything which build customer trust and improve the margin. The other major advances which I can tell you that the Kohira operates in the premium jewelry segment, where the customer are not just buying a product, they are buying the emotion, the celebration, the investment. Wedding anniversaries, the gifting and the festival occasions ensure we have this ensures the year-round demand. I mean, India is a country of festival. Every throughout the year we have anniversaries, gifting, the weddings, the festivals. That is where people like it to buy the jewelries. And when it comes to expansion, I think the cities like the big cities like Mumbai, Delhi, Bangalore, Hyderabad, Pune, Ahmedabad, Kolkata. I mean, these are the cities have a rapidly growing influence population, and that is increasingly open to lab-grown diamonds. Even tier two cities are witnessing a shift towards organized jewelry retail and sustainable luxury. So, I mean, these are the reason why you should go for it. Why Kohira stands out? 33 plus years of experience of jewelry manufacturing. The second is IGI certified lab grown diamonds. They've already been running 11 plus showrooms, exclusive showrooms, and 30 plus SIS locations all across India. They have manufacturing that ensures the quality, the better margin, and they also provide the lifetime and the buyback benefits. And the best part is that they are providing two, the investor profile. I mean, the FOCO and the FOFO. I mean, you have flexibility. If you really want to operate it, you can go for FOFO, or in case if you don't want to get into the operational part, I think you can go for the FOCO. FOCO gives you a kind of what do you call alternative revenue generation for you, right? Passive income. That is what is all about. So I think in case if anyone, okay, there's a question, just one more payback period in FOFO and FOCO. Okay, can we just repeat that once again, the payback period in FOFO and FOCO once again, sir? There is a question.
Okay.
Okay, agreement period also, if we can.
So the agreement period would be for 7 years. We are having a longer term of engagement. We don't want to have a shorter period of agreement period. That gives a very good approach for investor also, that we are now obliged to have a longer period of agreement with them, and we want to work with them for a longer period. Since the shorter period, I don't think so would be a good aspect for a jewelry line business. We want to work along with them. You have already mentioned we are giving IGS certification and everything. First, let me have no, the payback period question. Krishna ji, yes, बता दीजिए पहले.
Can we just answer one more time? What about the payback period in FOFO and the FOCO, and what is the agreement period?
So the payback period, Bharat, if you're asking the payback period for FOFO and FOCO,
Yes, please.
the payback period for FOCO, which will be slightly higher than FOFO, is 63 months, or which is 5 years and three months. And in FOFO, it is much less. It is 43 months. So which is like 3 years, 7 months.
Okay.
So definitely the payback period is high in FOFO. As I've already told, we are giving the higher margins for FOFO structured showrooms, since they have their own operational and utility requirements, which has to be handled by them. FOCO, definitely we are doing great in FOCO also. The buyback period is 63 months. But there also we have tried to have a very good margin structure, and we would be there for that.
Right. Also, Pankaj, based
Yes.
on your experience, you already been running multiple stores and also have the exact data. But how has been the journey of sales so far
Okay.
in your existing stores? And out of those 11 stores, how many of them are franchise?
So the journey has been great right now. Means we started with our first showroom in Bandra in 2024, and from there we have gone to great lengths. We have started 3 showrooms in Bangalore. Then we did for Kolkata, we did it for Guwahati, Rajkot, Delhi, Noida, and sales wise, it has been great. The rotations are up till one a year, so the rotations are great. We are turning good amounts of sales in each and every showrooms, right from the established one in 2024 to the current opened one. So in Bangalore, we recently opened our third showrooms, and they have catched up with good amount of trend for sales. They are in line with the other 2 showrooms also. So the numbers are great. We are doing great in that. And we have catched up for the entire inventory amount as of now for that. And definitely there are some FOCO showrooms. There are certain FOCO showrooms, but FOFO showrooms are also doing great, and FOFO are also doing great. So in terms of sales, we are doing exceptionally well, no doubt in that. And the
Okay.
strategy is also in place for that only. We up till now we have gone for the first phase of expansion. We were posing only 11 cities. Right now 11 showrooms, and the next set of expansion would be for 40 to 45 showrooms, which would be done entire in this year. And we have got good cities in that. We are planning to go for Chennai, Hyderabad, Chhattisgarh, Delhi. We are planning to open more 3 to 4 showrooms in Chandigarh, in Mohali, in Jaipur, in Ahmedabad, Baroda. Then we are going for Indore. We are planning to open 2 showrooms over there. Vijayawada, Vizag, then Kozhikode, Kochi. We have planned good cities for this years, and definitely we have got good amount of response from customer as well as investors. We have certain pipeline projects also, in which we have planned 2 showrooms for Hyderabad, one for Vizag, one for Vijayawada. And as already showed, I have done fit out for Gwalior, Ghaziabad, and Rajouri. So definitely the journey up till now, sales wise, showroom wise, quantity, quality wise, everything is good. Definitely, it's good.
Right. Also, we have a lot of competitors in the market, right? Particularly in the lab-grown segment.
Mhm.
How would you differentiate yourself from them in terms of the services or the price or the quality, the certifications? How would you differentiate?
So definitely there are quite good amount of competitions right now in lab grown diamonds. But personally, as Kohira, as a brand, I don't consider them as competitors. They all with me personally are being the spearhead for lab grown diamonds in India. We have brought a trend for value proposition or quality proposition, how we are differentiation taken from them. So as already told, we only work in type 2A diamonds. That is where we have set our benchmark very high for our consumers. So we will only provide the 2% of purest diamonds which are present right now in the market. We will work only on that, and that quality is unmatched everywhere. Value wise, we are providing diamonds from range of 20,000 to 60,000, and we can go for any sort of solitaires which is available in the market. But we will work only on type 2A diamonds, and that is where we are differentiating ourselves from others. We have all sort of certifications with us. We are IGN certified. We are Jelly BIS marked. So all sort of certification, all sort of quality measures we are having. We have our own in-house manufacturing excellence, which do provide us very good leverage with make to order jewelry segments also. Plus we have our inline jewelry segment lineup also, in which you can find everything, whatever you can think, what you can find it for, maybe for an gifting purpose, or for an bridal purpose, or for a day to day wear also. So we have everything in house. So whenever you visit our showroom, you'll find everything. The staff, the sales executives are trained in such a way that you will get an entire idea of a lab grown diamond, how it is made, how we are differentiating from others, and how the value is there for an lab grown jewelry. As I've already mentioned, our jewelry, our lab grown diamonds are physically, ethically, aesthetically, as same value as an earth grown diamonds. So that sort of value which people are thinking is not for an lab grown diamond, we have kept it in line with the earth grown diamond. No second thought in that.
Right. And also, if you could help us understand what percentage of sales comes from bridal jewelry versus the fashion or the gifting categories.
Okay, so this all depends on season wise. So majority, if entirely, if we go for year to year, 30 to 40% comes with bridal wears. 32% comes with daily wear jewelry. 30 to 40% comes with statement pieces, in which it is gone for entire aesthetical value. So everything is mixed and matched. We have kept the proportion in same way that every investor enjoys the stock mix and match, and the client also have everything to go and find everything over there. So they can see day-to-day items also. They can see bridal wears also. They can have bespoke jewelry also over there, and make to order value is also there. So the off shelves items, the shelf is made in such a way that you can find something new every time you visit to a showroom. We have made our own logistic in that way. We don't keep plenty of items on shelf for a longer time. We are continuously trying every week. We are seeing that what is not working in the showroom and what is working. We are trying as much as possible. We keep the longer period of shelved items off from the shelves from every showrooms, and trying to do what much we can do, which is trending, which is going very well in the market. We are keeping that.
Right. And my last question is like, what is the average ticket size and the repeat purchase frequency of customers on your at your
Okay,
stores?
so the ticket size is very well marketed. We can find something for as low as 5,000 also, and you can go the upper market is there's no limit for the upper market. You can make some jewelry for 37 to 50 lakhs also. So they are the statement pieces which would be there. You can find it. There are gifting articles which you can find for as low as 5,000. So there is articles for a newbie jeweler purchaser, for a seasoned purchasers. If you want have to have engagement rings specifically made for your D-day, if you want to have some gifting articles, you can find everything. There is something for everyone over there in our showrooms. And what was the other questions you were mentioning? what on that?
So the other question is there in what is the refund policy?
So we have a very structured and a very balanced refund policy. Also, there is 100% exchange rate policy. If you want to go for buyback, also, so we have a very good policy in which you will enjoy 100% of the prevailing market rate for gold and 85% of diamond value at the prevailing market rate. So we have now sorted it out. We are giving a very wide exchange and buyback policy in which people can enjoy the diamond and also have certain buyback valuation also.
Great, great. Thanks so much. I think that's it. I understand that within 45 minutes or 50 minutes is not good enough to get all the answers. The related to franchising, the business, and I understand that you may have more questions related to the overall investment and the overall planning. But for that, I would recommend you to please get in touch with us separately. Shashank, if you could just share your number in the chat box. So we have Shashank, who is leading this brand. You can connect with him. He is going to share his number in the chat box. Apart from that, I also have shared our centralized number, that is 9717683838, or you can also write to us at feedback@franchiseindia.in. So that is where you can get in touch. Or if you really want immediately to get in touch with Pankaj and team for further discussion, I think you can connect to Shashank Tripathi, who has just shared the number 7048569802. So that's how you can get in touch with us, and where we can have a deep dive discussion. We'll take care of all your queries, and then if all goes, then we'll go for the next course of action. So that's it. Thanks so much, Pankaj, for coming in today. I really appreciate you. It was indeed a great session. Made this
Thank you,
clear and
Bhagatji.
smooth.
Thanks, Franchisee India, for giving us a very good platform to showcase our product. And I wish you all the success. And definitely hoping for the investor to have a look at this. And whatever doubts and queries do you have, please, Shashank, please, you can always have Shashank, or you can always reach out to us for that.
Absolutely right. All right. Thanks so much, Krishna sir and Shashank, for joining this webinar, helping me drive this webinar. So that's it. See you tomorrow once again with a new brand, and we'll explore another business opportunity. Till then, take care. Have a nice day ahead. Bye-bye.
Bye.